What if I told you that every single dollar you spend, every paycheck you earn, and every item you buy is taxed twice? Not by law, not by your government, but by something far more invisible and far more powerful. A silent force that reaches into your savings account and steals from you in slow motion, every single day. They call it inflation. But that's not the real name. The real name is devaluation by design, a weapon created and refined over the past century to make sure you never truly own what you think you earned. And here's the wild part. This tax was never voted on. No politician campaigned for it. No government ever announced it. It just became the air we breathe, the hidden cost of existing in a financial system built on borrowed time. But what if that system wasn't a mistake? What if inflation, the rise in prices we've even told is normal, wasn't an accident of economics, but a carefully engineered feature? What if it's been the most effective wealth transfer in human history? Before we dive deep, where are you watching from? Drop it in the comments. Because tonight, we're uncovering the hidden story behind the secret tax you pay without knowing. And if you're new here, hit subscribe, because here, we don't do headlines, we do truth, the kind they hope you'll scroll past. Now, to understand this secret tax, we have to go back not to 2020, not even to 2008, but all the way to 1913. That's the year the United States gave birth to the modern Federal Reserve System. The official story says it was designed to stabilize the economy, to prevent crises, to ensure fairness. Sound familiar? Because every time they break the system, they sell us the same lie. In reality, 1913 marked the beginning of a new kind of empire, one built with armies, but with interest rates. A cartel of private bankers who quietly took control of the world's most powerful currency and made sure it served them first. When the Federal Reserve was created, the US dollar became a promise backed not by gold, but by debt. From that moment on, every dollar printed was a loan with interest owed to someone. Fast forward a century, and that design still controls your life. Prices rise, savings shrink, and the people who own asset stocks, real estate, commodities, get richer. Everyone else, they're running on a treadmill that moves faster every year. Sound familiar? Because this treadmill isn't random, it's policy. After World War II, the US emerged as the dominant financial superpower. The Bretton Woods Agreement of 1944 pegged global currencies to the dollar, and the dollar to gold. For a while, things seemed stable, until 1971 when President Nixon ended the gold standard. That moment was the turning point, the birth of infinite money. From that day forward, the US could print dollars without limit. And when you print without limit, you tax without permission. Inflation became the invisible tax erasing purchasing power, destroying savings and quietly redistributing wealth upward. By 1980, inflation hit 13.5%. The Federal Reserve's solution: higher interest rates. The result: a decade of recessions, layoffs, and debt crises. But Wall Street loved it, because higher rates meant higher profits on loans and bonds. You see the pattern yet? Every solution enriches the same small group. Sound familiar? Because it should. It's happening again, right now. Since 2020, the US has printed over $8 trillion out of thin air. Prices skyrocketed. Food, rent, healthcare, but wages barely moved. And the same elites who printed the money used it to buy hard assets before inflation hit. They got richer because of it. And here's the secret: when you feel poorer, it's not by mistake. It's the design. Because the inflation tax ensures your real wealth, the value of your money, goes down just enough for you to keep working, keep borrowing, and keep consuming. But there's an even darker twist. Because inflation doesn't just take from your wallet, it takes from your future. You won't believe the name of the system that made this possible. It's a mechanism so powerful that it's allowed unelected bankers to quietly manipulate the entire world economy for over 100 years. And it's not the market, it's not policy, it's something far more hidden and far more profitable. Stay with me. Here's the truth. The hidden system that turns inflation into the world's most powerful silent tax has a name: monetary policy transmission. Sounds boring, right? That's intentional. Because behind that sterile phrase hides the single greatest wealth extraction mechanism ever built. Here's how it works. Every time the Federal Reserve adjusts interest rates or injects liquidity, it's not just tweaking the economy. It's deciding in real time who gets rich and who gets ruined. You see, the Fed doesn't print money in the way you think. It creates credit. When it buys bonds or mortgages or debt, it's not spending, it's creating purchasing power out of thin air, but only for those who already hold assets. That means Wall Street gets the first wave of fresh money before prices rise. They call this the Cantillon effect, and it's the reason why billionaires can buy real estate, stocks, and commodities with cheap money before the inflation they cause reaches everyone else. By the time it hits Main Street, prices have already surged, and your dollars are worth less. That's the secret tax. It's not taken from your paycheck, it's stolen from your purchasing power. Let's put it in numbers. Since 1971, when Nixon killed the gold standard, the US dollar has lost over 87% of its value. That means $100 back then buys you what $13 does today. Now multiply that across every dollar in every bank account in America. That's a multi-trillion-dollar wealth shift away from the working class and toward those closest to the money printer. Think of it this way: when new money is created, it doesn't appear evenly. It enters the economy through the financial system. Banks, hedge funds, corporations, they get the money first, at full value. You get it last, when prices have already caught up. And this isn't some economic accident. It's the core design of a system built on perpetual debt. Because in a debt-based economy, money is created by borrowing. That's right, every dollar in existence has an equal dollar of debt attached to it. If all debt were repaid tomorrow, the money supply would vanish, the economy would collapse. So to keep the machine running, governments, corporations, and you, the consumer, must always owe more. That's why inflation isn't a glitch. It's the grease that keeps this engine of debt moving. Without it, people might actually save. And if you save, you stop borrowing. And if you stop borrowing, the system dies. So they need you to lose, slowly, predictably, invisibly. Let's trace it back to how this control was cemented. In the early 1980s, under Federal Reserve Chairman Paul Volcker, interest rates hit 20%. The world nearly cracked. But Wall Street adapted. They learned something. Volatility and fear could be profitable. Fast forward to 2008. The global financial crisis should have ended the game. Instead, it supercharged it. The Fed and central banks around the world created over $30 trillion in new liquidity to save the system. But who did they save? The banks that caused the crisis. Ordinary people lost homes, jobs, and savings. Meanwhile, asset prices, stocks, bonds, real estate, recovered faster than ever because cheap money flowed upward. Again, sound familiar? 2020 made 2008 look small. The pandemic triggered another wave of stimulus. Over $8 trillion was printed in under 2 years. Prices spiked. Food, gas, rent. Yet executives, hedge funds, and the top 1% increased their wealth by over $4 trillion in the same period. Coincidence? Not even close. The hidden tax worked exactly as designed, and it's global now. Central banks from Europe to Asia replicate the same playbook. They print, they buy, they inflate, they pretend it's for stability. But behind every rescue, someone gets richer, while millions lose a little more of their future. The shocking part: you don't vote for these people. Central bankers are unelected, untouchable, and practically immortal in policy terms. When they speak, markets move, currencies rise and fall, governments tremble. That's not democracy. That's financial monarchy. Now here's the big reveal. The true consequence isn't just inflation or inequality, it's dependence. Because once people's savings can't hold value, they have no choice but to borrow, and debt is control. It's not a conspiracy theory, it's a control mechanism, perfected. Every crisis becomes an excuse to print more, and every new dollar printed ensures your next paycheck buys less. That's the permanent tax, the one you can't see, can't vote against, and can't escape. But the story doesn't end there, because now they're upgrading the system. Enter central bank digital currencies, CBDCs. A digital dollar might sound futuristic, even efficient, but here's what they won't tell you. Once money becomes programmable, every transaction can be tracked, limited, or reversed. Imagine a system where your spending can be managed in real time, for your safety. They're not just taxing your wallet anymore, they're taxing your freedom, and it's already happening. Over 130 countries are exploring or testing digital currencies. The US Federal Reserve's pilot projects, like FedNow, are just the soft launch. The dream, a world where money expires, prices are controlled, and savings are a memory. So, What's the end game? Perpetual dependence. A society too busy working to notice that wealth has been siphoned off through a silent tax, a tax built into the currency itself. They call it stability. You feel it as struggle, and every time you buy, borrow, or save, you're paying the price of a system designed to keep you compliant. Here's your wake-up call. You can't beat this game by playing harder. You beat it by understanding it, because knowledge is the only currency they can't devalue. So, the next time you hear inflation is under control, or the Fed has it handled, remember this: control was always the point. We are living through the final phase of a century-long experiment, one where trust replaced gold, and illusion replaced value. And when that illusion breaks, history won't call it inflation. It'll call it the great wealth extraction. If this opened your eyes, don't scroll away. Subscribe for more unfiltered truth, because the next chapter of this story is already being written in digital code and central bank vaults. Are we wiser now, or just walking the same path in better suits?